A very good afternoon. Good morning, Carolyn. Adair, very warm welcome to you. Hope everyone's doing well. Hope you had a nice weekend, Carolyn, Adair. Let me just check everything's set up correctly. Yeah, I think that's right. Very good. Yeah, busy one for you. A good one for you, Adair. I haven't had a busy weekend too. My daughter off to uni last week and been doing my son's personal statement for his uni application. So we've been working hard trying to get that just right. And the women's England team won the Rugby World Cup, which was nice. I watched that on Saturday, which was really good to see. And I expect Ryan was watching the Ryder Cup when he comes along. I'm going to give it folks a minute or so to come on in because I just want to give a broad outline of where we are in terms of market dynamics. We're sort of quarter end. We've got the prospect of a US government shutdown. And I just want to take a big sort of picture look so we know where we're at in terms of stocks, etc. Hey Osher, good to see you. Welcome. Going to be a big week this week on US labour data. That's going to be a particular focus. So I want to run through that with us as well before we get going. Right, let's get stuck in. So, Hassan, welcome. What to expect for this week? Now, this is what we've got. If you take a look at short-term interest rate markets, this is probably the best place to start. The expectations that the Fed is going to cut twice this year. So we've got 2 interest rate cuts coming. In light of that, we have a number of labour data prints that are coming up on JOLTS job openings on Tuesday, private ADP data on Wednesday, jobless data on Thursday, and non-farm payrolls on Friday. So if we just take a look at what we've got, in terms of job openings, there's a general weakness in the job opening market. And what the market's going to want to see is if job openings are weaker than markets are expecting, in other words, coming in below minimum expectations, expect dollar weakness, euro dollar upside. The non-farm payroll is expected to come in at 50,000. Now, I did see an interesting report on investinglive.com, formerly forexlive.com, from Adam Button.
Further from US President Trump on True Social says in order to make North Carolina, which has completely lost its furniture business to China and other countries, great again, will be imposing substantial tariffs on any country that does not make its furniture in the US. Details to follow as US President Trump on True Social, speaking on lost furniture business to China and other countries, says we'll be imposing substantial tariffs on any country that does not make its furniture in the US.
So you can see here the non-farm payrolls, this report from Adam. I worked with Adam for a number of years, great analyst, and he's just highlighting a bit of a problem with potentially with the headline number. He's saying that there's a compelling argument there's a sharp drop in US immigration along with self-deportation, and enforced deportation is having a material impact on the labour market. So he's recognising it's very hard to model, but what he's saying is that if the print comes in lower, 0 jobs added. So if you look at the expectation,
bear in mind, this doesn't follow Friday. Trump last week, there was a range of around 30 to 50% of tariffs on furniture coming. So this is just more details here from Trump that they are coming.
There is headline expectations. The lowest expectation is there's a drop of 20,000 jobs. So there's a subtraction of jobs from the US economy. Now, that would be very dollar negative. But what Adam is saying, and it's worth bearing in mind, is that if the unemployment rate remains flat or 4.2%, you may not see as big a reading as if you have the unemployment ticking up to say 4.5%. In other words, more people out of work. So just be aware of that on Friday.
The commentary
There's a bit of risk with that headline.
Pass-through is less than expected.
Now, in terms of the near term, we look at tomorrow, it's that JOLTS. So what to look for is if you see JOLTS jobs coming in less than 7 million jobs being added to the US economy, that should be dollar negative because it's showing a weakening of the US labour market. In other words, more cuts to come, cuts are justified. Do you remember last week, right? We saw some dollar strength come back in, didn't we? We had that firmer than expected US GDP print for the second quarter, took markets by surprise. Initial jobless claims, much lower than markets were expecting. All of that just gave us that dollar strength. Now, if you remember, at the time, I said, I think this is overdone, right? It's a bit of an overreaction. So that's what prompted my trades in euro dollar long and dollar yen short. So euro dollar long is nicely in profit, and I've now moved that to break even. Okay, so I'm just going to show you that. So I'm going to move that to, where is it? It was around there, wasn't it? I'm going to move that to break even. So just looking for potential upside here. And then the dollar yen pair, which I also entered short, I'm going to move that to break even now as well, because this is the area, right? I definitely want to see price going back over that area. So I entered on that sort of little spike on the essentially. You can see it here, right? And then that's sold off down into this area, and we're sort of in a big support area. Now the yen is the strongest currency on the session. You can see here.
Hammock expects firms to pass on more of tariffs.
Right, and that is due to some central bank speak from Bank of Japan's Noguchi, who says that upside risks are becoming more important in making policy decisions, and the need to adjust policy is heightened. So that's strengthened the yen. We've also got the LDP leadership election coming this week. So we're coming to that sort of risk. And if we don't get that Liberal Democrat kind of victory, or we get some acknowledgement that there needs to be interest rate hikes from the Bank of Japan, from any government officials linked to the winning party, then yen can strengthen significantly again. So as I said, I'm just leaving that at break even, and now let's see where we go with it. Looking around markets, you see equity markets are being bid. Volatility is lower. We're across the board. Okay, DAX is struggling a little bit. Euro Stocks is off the best levels for the day. But the general mood out there is we've got interest rate cuts coming from the Fed. There's no recession at the moment projected for the US. There's optimistic growth prospects. So it's buy the dip, right? That is the broad outlook that's over there. And sentiment is positive as a result. There is the prospect of a US shutdown on October the 1st. We discussed that last week. If it does happen, the reaction is likely to be short-lived. Net reaction, looking at the guys over at ING, and they see it as a small dollar negative. So prospect of a shutdown October the 1st. Trump's meeting with 4 congressional leaders today. We may get some breakthrough, we may not, but either way, that's roughly what to expect. It's never usually a big deal because the shutdowns are generally going to be short-lived. Of course, there can always be exceptions, but that's the current mood at the moment. A little bid coming to the bond market on expectations of interest rate cuts. That all makes sense. And now it's just looking at the data for the jobs prints. JOLTS tomorrow, ADP Wednesday, jobless claims Thursday, NFP Friday. With that caveat, please see that caveat if you've just joined the webinar with the link on the site about the potential headline of non-farm payrolls being misleading for Friday. So just keep an eye on it. I haven't seen that reported anywhere else, but Adam Button is a really great analyst and it's worth listening to, but I haven't looked into the details myself, so it does come with that. Dollar weakness continues, and you can see we're testing some key technical areas. Got that support and area at the 98 and the 97.50, but I'm happy to be short the dollar via euro dollar longs and dollar yen shorts, and then I'm just going to see where that goes. Apart from that, I think that's the major things to have a look at. If we just look at the data coming out today, it's quiet. Where are we? 29th. We've got a number of Fed speakers. We had Waller. Now Waller is very respected speaker, and I think he spoke at 12. He's not on this one. He's not on that. Let me just find out where he is. Yeah, Waller spoke at 12:30, but there was no comments on monetary policy. We have got 6 o'clock, 3 p.m. We've got Hammock at 3, so be aware of that. He's a more hawkish member. And we've got Feds Williams and Muslim and Bostich. So Williams and Muslim at 6:30 after our session, Bostich at 11. So there's a spattering of Fed speakers, so we need to be aware of that. And you can see Hammock is actually down here at 1. I've got Hammock due to speak at 3. So there's a bit of a difference there between the two calendars that I've got. Let's see, have I seen anything from Hammock yet? Yep. So Hammock has spoken. So that looks like Hammock has already started speaking or is just speaking now. The other thing to be aware of is ISM data coming out this week as well, which can move markets. But I'll just have a quick look at the data for tomorrow, folks. I'm just checking, there's not much today. Pending home sales at 3. It's not particularly a big market mover, just be aware of it. And then tomorrow, we've got the RBA meeting overnight. They are expected to keep on hold. And the big thing is in Australia, inflation has ticked up a little bit higher. So there's a prospect of them not even cutting in November. So Aussie strength against the New Zealand dollar remains the case. So we'll factor that in tomorrow and see if there's anything significant. There's nothing that I'm looking at going into the meeting. I'll only look at it later after the meeting. And then we got inflation data from Germany for the Eurozone. JOLTS is going to be the big one, and consumer confidence coming up at the same time. Yeah, so it's JOLTS jobs really coming up, and the trade will be, if it comes in underneath 7.0, then look for dollar weakness. Right, let's go and have a look now at seasonality. Just notice that we're coming into October. It tends to be a bit of a flat month for the S&P 500, but the turn of month has a bias for upside. Okay, so average return 0.78%. Look at events, you can see that the turn of the month for October, first day of October, it tends to be up into and then out of the next couple of days, tends to see upside. So that's kind of in line with what we're looking at. Bit of upside on positive sentiment. Hey Nadja, good to see you. Oh, the other thing is EA Sports did have a buyout deal that's being mooted, and that's really boosting EA Sports. So worth looking for a tight flag, a breakout pattern on that. Let's see, where is that? Here it is. Pre-market is well up there, but look for breakouts on EA Sports. That's not unreasonable from a flag pattern. Apart from that, yeah, euro dollar longs remain fine, dollar yen shorts remain fine, and I've got my copper longs. That's the only trades that I've got on. 1 hour, we've got the point of control set up here at the 6733, and markets just stalling at the highs of the days. The delta is positive from the overnight session. The key areas, we got 6770 for standard deviation 1, and we've got 6622, which is the standard deviation to the downside. So we haven't got any standard deviations to worry about as we go into the session. The 15-minute chart, you can see that we've had this buyers getting trapped there at this level. We've got the value area which we tried to break under, failed, and now trying to break above, stalling at these daily highs. On the 5-minute chart, you can see sellers coming in, trapping buyers, and you're trying to see a little bit of downside. But the problem with this is we're right in that developed value area, right? We're in this developed value area, and essentially we're in a strong support level, right? Even though we've got some sellers trying to come in on the 5-minute chart, this is support and remains a support level. The big picture on the ES, we got major resistance up ahead just at the 6700, so keep that in mind. And on the 15-minute chart, you can see we've got a fair value gap that price has just sort of fallen into here around that 677. So decent support area, fair value gap, could find some coming in at that area. So we'll wait and see what we get at the open. The TPO shows us that we're in balance from the Globex Open. We're up at the highs, that value area high. Been there once, we're up there again. So the potential for selling lower underneath that point of control is not unreasonable. And we'll see how that goes. Looking at the chart from the US perspective, we can see that we're in balance from the US perspective. It's open, we're balanced from overnight. From the US perspective, you can see that we're in balance, trying to trend higher. But the recent aggressive trend, fast trend, has changed here. The rhythm's changed. And you can see markets are sort of a little bit uncertain, and we're seeing topping action over here. I want to look at this open to see what we get. For now, there's no clear direction. We're in support. There are some sellers who are just sort of trying to take back control, but difficult area, and it's a fair value gap to the upside. it is a point of control area from the Globex Open, right? And you can see that sort of point of control just sat up here, which is capping prices for now. All right, folks. So broad big picture is markets are feeling happy that the Fed's cutting. Growth prospects are still good. The US government shutdown could happen October the 1st, but it's not expected to massively derail markets. And we have a series of jobs reports coming out this week for the US, which would help us assess whether the two interest rate cut scenario is still legitimate. For now, buy the dip, watch out for Fed speak, and get ready for jobs data tomorrow. 100% tariff on non-US movies. Oh man, yeah. It's crazy, isn't it? It's not going to stop. Yeah. Well, the only thing is all this constant uncertainty is just a perfect environment for gold. And gold continues to find buyers. And even, look, this is what's so strong for gold, is that even when you have this environment here, now normally you see when you have the dollar rising and real yields rising like this, right? I know this is inverted for the tips. Normally gold will be pushing lower. So this environment for gold is bad, and yet gold still gains. And there's an old saying in the market that if something can't sell off on bad news, it can't sell off at all. So dip buying in gold just remains the logical choice and the logical option. All right, folks, gonna make myself a cup of tea and then I'll be back here for the open. See you in a bit. Good result in the Ryder Cup, Ryan. Saw that and thought of you on the weekend. Catch you in a bit, guys. Still favour buying this market, even though we've got this heavy delta coming in. So, you know, broadly speaking, I would expect dip buys. Point of control's now there at the 6722. So decent support area forming. Right, it's going to have a quick long there because that makes sense with those buyers, right, trapping these sellers here. Have a just quick long and see if you can get anything out of it. Yeah, and you see quite a lot of buyers have come in there, so I'm happy to hold that, see if I can get a bit more, get above there, have another quick long.
Just getting commentary here from the Chinese Commerce Ministry. They say they oppose the US export control measures.
Okay, that's a bit of commentary from China.
And going back to China, the Commerce Ministry urges US to correct wrong practice. And China's Commerce Ministry also urges the US to stop unreasonable oppression on Chinese firms.
A bit of fighting talk from China.
Just an update from the New York Fed Deputy Market Operations Chief. It says banking sector reserves still remain abundant. Expects to see more pressure on repo rates going forward. Sees healthy shifts in how markets are managing liquidity. Says the standing repo facility is in place to manage liquidity shifts. Says modest volatility in money markets rates is healthy. Said the Fed balance sheet is getting closer to ample reserves level.
Still think this could be a good support level. Just gonna give it a little bit more room. Right, now this would be a nice potential turnaround if I can get those sellers trapped here. Let's have a look. So there's a nice support region. Let's see what we can get. Still like this for a turnaround zone. All right, let's see if I can get these sellers trapped. That would be good for a buy. Yeah, okay, I'm going to add another position in there. With those buyers just trapping those sellers, that could be a nice turnaround area. Let's see. Oh, that's not good. No, so that's out.
Further from China, they do vow measures to safeguard its interests.
Right, because you've definitely got sellers coming in trapping buyers, so that's wrong. So I just got to leave that, reset and think again. Okay, let's have another look. In that support area, need to see something. You know, those sellers getting trapped, I could try it again, but otherwise, those sellers came in and trapped those buyers there. I think they did. Yeah, they did.